Hello, I'm Mark Winsmith and I'm at the Hotel Investment Conference in Asia, and I'm here to give you an update on the global investment trends. So far this year, hotel investment volumes have totaled $40 billion. That's an 8% increase on the first 3 quarters of 2013 and the best performance that we've seen in the market since 2007. The volumes in Americas are up by 14%. Very strong market conditions, fueled by plenty of willing lenders and a strong sense of confidence in the trading market over the medium term. In the Americas, the private equity investor is dominating the market. They've accounted for around 50% of the transactions so far this year. That trend's likely to continue. Funds are raising significant amounts of fresh capital. Clearly they'll be chasing deals to place that capital in. So far this year, Europe's been the sweet spot for cross-border capital. It's a combination of US private equity, Asian long-term investors, but also domestic investors returning to the fold. The other aspect is that we've seen lenders return to the market.
All the traditional senior banks are making their way back into the hotel lending space. However, as they are subject to tighter regulation and increased capital requirements under Basel III, they cannot be and they are not as aggressive as they used to be at this point in time in the previous cycle.
Today, the lending universe in Europe is more diverse than it's ever been before. The established European lenders are now competing alongside US and European life insurance companies, mortgage REITs, private equity funds and other money managers.
Asia-Pac investment volumes are down so far this year. Last year we saw a number of corporate disposals take place and they haven't been repeated. But one of the trends that we're seeing firmly in place is an increase of interest from Asian investors in Europe, and that's London, US, and that's mainly New York. But the sort of new appearance on the scene is the Chinese insurance companies who have done a number of marked deals this year. And again, that will be a significant driver of investment volumes through 15 and beyond. Accessing Chinese capital requires a combination of skills, not least of which is longevity of relationship. Asians are very careful where they invest and who they invest with. Our strategy to drive more capital to Europe and to the US is very much around the base business here, which has been in place for a long time. So there are firmly established relationships, and we help conduit through those relationships capital to New York, to Los Angeles, to London. So we are forecasting that global hotel investment volumes will be $55 billion for 2014. Again, that's going to be a very strong year. Clearly a couple of risks have emerged since the last update. The first one being the situation in the Middle East. Secondly, Ebola. Thirdly, economic growth is not as strong as it was in the press, certainly, for the previous 3 quarters. But we're very confident that this increase in confidence and activity is going to continue into 2015. Thank you for watching, and please get in touch with one of my team members if you'd like to follow up on any of the points that I've talked about today.